Good morning. This is Larry Edelson for my Uncommon Wisdom Market Video Update for Monday, October 3rd. Well, this past week we saw pretty much what I expected, which was a lot of sideways volatile trading action in the key markets, most of it dictated largely by ongoing conflicting news coming out of Europe on the sovereign debt crisis. One day we see progress towards some kind of deal to bail out Greece. The next day we see that the deal and negotiating has broken down. And this kind of action, of course, in the fundamental short-term news that's the backdrop to these markets, is causing quite a bit of short-term buffeting up and down in virtually all markets. That probably is not going to change over the next few days. I do expect that in the end, Greece has no other choice, as I've mentioned in the past, but to default on its debts and withdraw from the European Union and take back its drachma, the currency, its own currency, and basically devalue its currency in order to kickstart its economy so that it can move forward. That's likely to happen, in my opinion. That is what's going to happen. It remains to be seen when it will happen. But it's important to realize that the intermediate and long-term trends are never affected by any day's particular fundamental news or economic stats. And having said that, let's go right to the charts right now. I want to take a look at gold. Gold did manage to rally off of its extreme low down at 1535 in Asian trading late Sunday night, our time. This is past Sunday, a week ago Sunday. It continues as I do this video on late Thursday night U.S. time. Gold continues to buffet around between 1650 and 1535 with a bias towards the downside. On Friday, we have several sell signals coming into place. A close below 1646, which is what I expect, and 1683 will give us basically a double weekly sell signal confirmation and also a monthly sell signal. So assuming that's elected on Friday, September 30th, which I'm pretty sure it will be, then I can safely say to you that the gold market remains in a corrective phase and that we will see at least a retest of the 1535 level, which was this low down here back in Asian trading late Sunday a week or so ago. Now, importantly, when I reference numbers in my columns, any of my writings, or on this UWD video, for a closing basis signal, such as gold closing below 1646 or 1683, which I just mentioned previously, all of my numbers are always reference the New York gold market. And that is because the New York gold market is the most liquid market of all the gold markets. It includes the futures and the cash. And all of my signals, actually, whether it's gold, silver, the Dow Industrials, S&P 500, or even the currency markets, are all reference to U.S. domestic exchanges for those particular markets. They're far more liquid than their Asian or even European counterparts. So all of my signals, just for future reference, are always given in terms of the respective New York markets. So, having said that, I expect to see gold lower. I do expect it to remain very volatile. I have taken on hedge positions and speculative short positions via inverse ETFs and call options on inverse ETFs for my trading service members. They've done quite well. We still have some open positions. I expect those positions to do some very nicely in the next week or so. So please stay tuned to my analysis on the gold market for that. Let's now take a look at silver. Silver is continues to act very, very poorly. After we got down to this $26 low in late Asian trade a week or so ago on Sunday, we've started to bounce back. But notice how silver's been unable to get above the $35 level, which was $35, $36 level, which was previously support. We sliced right through that. And now it's acting as resistance, and I expect it to indeed hold and see another leg to the downside unfold in silver along with gold. In silver, however, I would not be surprised at all to see a new low down around the $23 level, where I have some technical support, and possibly sub $20. So I'm not ready to turn around and give a buy signal yet in silver. I still recommend staying away from it with a 10-foot pole from the long side, and only taking on short positions on rallies, and if you can afford to take on the risk involved in shorting silver. I've been doing that for my trading services, and they have some nice gains that they've racked up in silver. Okay, let's now go on to the dollar index. Pretty much as I expected, slithering back and forth here between 78 and 80. You can see that here. However, as I indicated in my video a week ago, the flash video that I sent out on Monday, I think it was the 26th or 25th, I do expect one more leg up in the dollar to unfold up to about the 82 level here that you can see on this chart. It will probably occur in conjunction with the next leg down in the precious metals and in commodities. Turning our attention now to the Dow Industrials. The Dow Industrials, continues to act pretty resiliently when you consider all the bad news that's been thrown at it. Bad economic stats, the crisis in Europe, et cetera, et cetera. It's kind of amazing that it's holding at the 11,000 level, give or take a couple hundred points in the light of all this. That is a subtle indication of the long-term strength that exists in the Dow Industrials, which I've talked about previously, and I've also mentioned that we won't see that strength really unfold in the Dow Industrials for another year or so. In the short term, I still expect the Dow Industrials to make a move down to first 10,300, then some technical support at 10,000 down in here, and eventually work its way down to about the 9,000 level. So I remain of the opinion that you should not be aggressively long really any stocks at this point, with the exception of a select handful of natural resource and mining shares, and you should be, with your speculative funds, shorting the broad stock markets into this upcoming cycle low. That's it for this week. Please stay tuned to my columns in Uncommon Wisdom Daily and any flash alerts I may send you to for my trading services, including the Real Wealth Report. This is Larry Edelson. I'll talk to you soon again. Bye-bye.